All right, everybody, welcome back. So in this video, we're going to talk about the watch list that I use in the morning briefing. I've had a lot of people ask about this, and they always want me to share it, which I do. Obviously, if I have it, you can have it. The problem is when I share the list, all you get are the symbols that are in my list. You don't get everything that you see here. And that's because when I share a Thinkorswim watch list, you don't get any of the columns in that watch list. Now, these columns are nothing more than indicators. So if you have the indicators, you can set your watch list up just like this. So first, let's talk about what these are. We got a little gear icon up here in the upper right corner. And if you click on that, you can get into the watch list and choose different indicators. So we want to go to customize. The first one that we have is mark percent change. Now, someone pointed out to me a while back that it works really good in the pre-market, and I had been using this kind of sort of homemade indicator, and it worked okay. But Thinkorswim with pre-market material, it glitched a little from time to time. This doesn't glitch, and it's not custom. It's just a Thinkorswim watch list column. So search for mark percent change and you can get it. And what it's going to give you is basically wherever the market stopped yesterday and where we're at this morning. And it's not going to be perfect, right? If the market after hours moved up and then this morning hasn't moved at all, it'll still show the market moved up. And you're going to think we're up in the pre-market. We're not. We're just up from the after hours. So again, not perfect, right? The ideal indicator for pre-market gaps would be when the market opens at 4 a.m. when pre-market trading starts, that something starts recording right then and says since 4 a.m. we've moved up or we've moved down. That would be the ideal world, right? But that's not what this is going to do. It's going to start at 4 o'clock when the market closed, and then it's going to record after hours and pre-market, but it's better than nothing. The next indicator that I have is 3/8. And it's exactly like it sounds. It's a 3-period moving average over an 8-period moving average. And what this is showing me in green is that the 3 is above the 8, or in red, that the 3 is under the 8. And if you can visualize when you're looking at a stock chart, when the market is up, the 3 is above the 8, and when the market is down, the 3 is below the 8. So this is the code. I went ahead and clicked on the little scroll here. It's how you adjust things when you're using a watch list. You can see I've got the opportunity to choose the date and time here. I don't have to do it with the code, right? You don't have to speak Thinkorswim code to change your date and time. Not for this one. You can just do it here. And I do have it set for daily because that's what I'm interested in. Some of these do have a little drop down where you can use the slider here, but that slider is more often connected to an internal Thinkorswim indicator, not a custom indicator like the 3/8 play. So that's what this is doing. It's just telling me when the 3 is above the 8 or the 8 is above the 3. That's all. And then you choose the date and time. The next one we have is the 5-day RS. That's relative strength. Now, I didn't make this one. It was made by someone at Thinkorswim, John McNichols. If you go to the Thinkorswim on YouTube, you'll see John McNichols. He codes live, and he works at TD Ameritrade. I think you can get it from his Twitter as well, and that's his Twitter handle, John McNichol at TD Ameritrade. So I have it. I put it into Thinkorswim Discord. And what we're doing here is we're just using close divided by the close of the S&P, right? So relative strength. And what he says right here, it's the returns over the last 5 days, about 1 week, with relative strength outperforming over 13 days, green or red. So green for overperforming and red for underperforming. All right, and that's this column, right? And I changed it to blue and red because I don't want to use the green. I wanted this to match my candles. My candles are blue, so I went with that. And so that's why, sometimes in the pre-market we'll be up and yet that'll be red, just like here with technology. Technology is up, the market just closed, we're up 1%, and yet this is red and showing 0.87. And like, why is that? Well, because it's relative strength over the last 5 days, not, hey, what did we do today, right? So then the next one is CAM, and I use letters here to help remind me of what my time frame is, because sometimes I adjust that. So if we go into CAM, we can see I have it set to the daily, but I need to remind myself of that. So it's really just the CAM indicator with the letter D behind it. And that reminds me, oh, hey, I've got it set to the daily. If I do change this to an hourly, then I just change that to an H, right? Simple as that. So what is the CAM indicator? The CAM indicator is a trend detecting study based on a coordinated usage of the average directional index, the ADX, combined with the MACD oscillator on the same chart, which is pretty cool. The CAM prefix actually stands for coordinated ADX and MACD. The ADX study is used to assess the strength of the current trend, while the MACD oscillator is used to detect the direction of the trend. So one is giving you direction and the other one is telling you how strong it is. CAM up, when both the ADX and the MACD are rising, the study recognizes an upside momentum and the colors of the price plot green. CAM pullback, which is CAM PB, when both the ADX and the MACD are declining, the study recognizes a possible pullback and colors the price plot yellow. CAM down is when ADX is rising, but the MACD is declining. The study recognizes possible downtrend conditions and colors the price plot red. CAM CT, when the MACD is rising, but the ADX is declining, the study recognizes a possible counter trend rally, CT, and colors the price plot blue, right? So it has those 4 different colors. And if you look at the study, we've got blue, green, yellow, and red. And depending on which color we see there, we'll know that it's either a pullback, a counter trend, down, or up. Okay. So that's your CAM indicator. And all I did when I put this together is I went and took the CAM indicator that you get on a candle chart, stole all the language out of it, and then used it to write that up, right? So if we go over here to the beaker and we just type in CAM, we get the CAM indicator. And if we open that up, we'll see the language inside of it, right? There's CAM up, CAM pullback, down, and counter trend. So I just use the same language that it had here. And what this does is it colors the candles on your chart, which, some people don't like that, right? They want to read price action and then this gets them all screwed up. So rather than having that, I use the watch list or I use this label indicator. That way I don't necessarily need my candles changing colors. I can just read the language up here. We have a CAM down, so possible downtrend condition, which is a rising ADX and a fading MACD, right? That's the way I'd rather do it. So the CAM indicator, that's on the watch list so that we can sort things by what's in a downtrend, what's in a pullback, what's on a rally, and what has momentum, right? The next one is called an impulse. There's a lot of indicators out there called impulse. So you really want to be careful with that one. If you run across somebody who's using a custom impulse indicator, Thinkorswim has impulse as well, but this is a modified version. right? And again, I just use the letter D to remind me that I have it set to a daily. I link all of these together. So if I change the CAM to an hourly, I will also change the impulse to an hourly and the TMV to an hourly, right? That's the way that I run it. All three of those for me are always on the same time frame. So this one has RSI and MACD and EMA, right? So if we get out of all of that for a minute, the CAM indicator, and we come back over to a stock chart, we hit the beaker, type in impulse. Usually you'll see impulse connected with something like the elder impulse or something like that. This one also will paint your candles. So it's something that, again, people don't like it when their candles get messed with. You can see how it has orange and green and blue, and I think there's maybe one other color in there too. It really kind of messes with people. The cool thing about the fact that it's a Thinkorswim study is that there should be something in their education. So if you were to get out of this and then search for the impulse indicator, you would be able to find more about it, right? So go back to impulse here. We got the white question mark. We can click that, and then we'll scroll down here and we can hit more details and we can go read more about it if this isn't enough. The impulse study is a bar coloring system based on two indicators, an EMA and a MACD histogram. For the histogram, the 12 and 26 moving averages are used for input parameters. A bar is painted green if both the MACD and the EMA values are higher than those of the previous bar. And then the bar is painted red if the MACD and the EMA values are lower than the previous bar. It's painted blue if neither of these two conditions are met. Pretty simple stuff, right? If we get out of that and we look at the chart again, and really the reason I keep these set to daily is because if you think about it out here, it makes so much more sense, right? We're in a range like this and the colors change up and tell us what's going on with the MACD histogram and the moving averages. Blue tells us that nothing changed. Green is positive, red is negative, that we changed into a negative or we changed into a positive. We're doing better, we're improving, any kind of language like that. So that's in the watch list as well, right? We come back over here. The next one is TMV. Now, again, I've got this set to a daily. So we can come in here and we can see I got it on a daily. And this description, I really try to put this description on all things that I make. I try. I can't guarantee that it's in everything, but it really helps when it is, right? The TMV analysis measures multiple indicators to develop a current market condition bias. The various indicators include a volume oscillator, which is set to 1 and 20, the ADX, which is set to 10, a Keltner set to 13, a simple moving average using the 8-period moving average. And then it checks to determine if the closing price is greater than the 8-period moving average. It checks to see if there's a rising ADX, and it checks to see if the closing price is greater than the upper or the lower bands of the Keltner channel. That's all, right? And I'm sure that might sound like a lot, but it's really not that bad. Trend direction is defined using location of price relative to the modified Keltner channels, where the middle line is SMA of typical price, and the upper and lower lines are based on the SMA of high and low range. That represents our volatility. Strength is identified by rising or falling ADX. For better understanding of trend direction and strength, price plot is colored using the following algorithm. A bar is painted in an uptick color when its ADX value is higher than the previous one and price is above the SMA. Does that sound familiar? Downtick color is when the ADX is rising and price is below the SMA. In other cases, bars are colored gray. It sounds exactly like what we were just reading with impulse, right? If things improved, it turns positive. If things are deteriorating, it turns negative. And if nothing changed, if we're still the same as what we were before, then it changes to a neutral color. Besides the mentioned indicators, a modified version of volume oscillator is also calculated. Its only difference from the standard version is that the results are expressed as a percentage instead of points. This technical indicator is included in order to predict possible trend reversals. So-called volume spikes, bars that have volume oscillator values higher than 0.5%, often precede major changes in trend. For stocks, being heavily traded on heavy volume, a value greater than 0.75 is suggested for volume spike determination. So what we're doing here with that last paragraph is this volume oscillator is looking for unusually large volume in relation to volume around it. And if we're going to be using it on stock, we need to adjust it to 0.75. And if we're going to use it on futures, we can just leave it at 0.5. In order to interpret the TMV correctly, it's suggested that you use it with a 13-period CCI. The main principle of the TMV is looking for agreement between the CCI in relation to its zero line and placement of price in relation to the Keltner channels. Strong uptrend is often characterized by the following bars. Their uptick is when price is above the Keltner channel. Their downtick is when price is below the Keltner channel. When we add that and the CCI is positive, then we get rid of the whipsaws. If a pullback occurs, price might be expected to find support between the upper and the lower Keltner channels. Conversely, downtick colored bars, price is below the lower Keltner channel and negative CCI suggests strong downtrend conditions. In that case, a possible rally is likely to finish between the lower and the upper Keltner channels. So if you've ever tried to use a chart that had Keltner channels on it, they don't expand like a Bollinger does. And that means price tends to break out of them a lot more frequently than a Bollinger Band. The issue is fake outs, right? Where it breaks the Keltner and it comes back in and breaks back out and comes back in. So what this does is it ignores the breakout to give you a signal unless we've got the CCI also giving us a signal. It's not perfect, right? But we're just trying to eliminate false positives or extra signals that really didn't go anywhere. So when we bring that back to the watch list and we look at the TMV, we can see I've got it pretty much narrowed down to the red and the blue and the gray. And I went with a little bit of pink on that. If we dig into my code a little. So when the ADX is doing what it should and price is above the SMA and the close is still inside the Keltner channel, then it's light green. But once price breaks above the Keltner channel, then it turns just regular green. Same thing in the other direction. If we're looking at a downtrend with price underneath the SMA and near the Kelt's low, but still above the low, then it's a dark red. And if we break it down below the Keltner, then it turns orange. So pretty easy, right? We're looking for breakdowns, breakouts, weakness. If we're near the lows, underneath the lows of the Keltner, all that. So let's go to the TMV on a chart. That way you can kind of visualize what it is that we're actually trying to capitalize on. So we go to the TMV, another thinkorswim indicator. It's not mine, right? I just took what they had and I modified it. This is what a TMV indicator looks like with the green and the orange and the gray. It's okay, but I don't like my candle colors being messed with, right? This really is a lot better to be used. Any of these that are changing your candle colors, if you don't use candles, but instead you use a bar, right? Because the bar will have the tick on the side that'll show you open and close. And that way you'll know if it's a green bar or a red bar, if it was a positive or a negative bar. Because right now, if we just have all these bars the same color, was this a up day or a down day? Well, we can't see, right? Then we have to look over here and say, oh, okay, it was a green day. We don't want to have to do that, right? So If you turn it into a bar chart, then the bar tick will show you that we opened down here and we closed up here, and it was a bullish day where we went up. And then it won't matter that it's all green or it's all gray, or we could use whatever color we want, right? So that'd be a good way to go if you do like indicators that change the color of your candles. Otherwise, what I ended up doing is using the label, right? So in this fashion, the labels will tell me if it's positive, negative, rising, falling, all of that. We don't have a signal, right? But maybe if I jump around, there we go. So prices above the 8 MA, current conditions are bullish trend with a positive CCI. It reads that TMV for me. So we'll come back over here to the watch list. ADR percent is my own custom thing. Basically, what I wanted was the average daily range in a percentage basis. What is the average daily range? Well, it's just like it sounds. I take X amount of days and I calculate them from their highest to their lowest value and then average it over how many days that I want. And I wanted 20 days because 20 days is a market month. So that's what we're doing. We went back 1 month and measured it from its highest to its lowest value. And then we did that again and again and again for 20 days in a row and divided it by 20, and we mark our levels. The thing is, if we've got an average daily range of 1%, right, let's come over here and look at it on a chart. I always feel like it's easier to explain things when we have a visual to work with, all right? So if we come back over here to the chart, right now, Caterpillar has an ADR of 2.25%. Well, if you think about it, that means when we open on the day, we could go up 2.25 or we could go down 2.25. But that's not all that it's implying. It's saying that the average daily move is 2.25%. Well, we could go up 1.1%, and then we could go down 1.1%, and we would get near that 2.2, right? So what my indicator does on the intraday time frame is it measures not just that 1 point or that 2.25%, which is from yellow to yellow, but it also measures 2.25% half going one way and half going the other way. And that way we've got the ADR marked out from a center point, but also from the edge. Think about it another way. Think about it like a football field or a basketball court. From the middle, this might be a field that is 100 yards, right? From the middle, I could go 50 this way and I could go 50 that way, and I've went 100 yards. But from the middle, what if I went 100 yards in one direction? Or I went 100 yards in the other direction? That's the dilemma, right? And so that's why the ADR is used the way that I use it, where we got the center of the basketball court being where we closed the day before. And then we can go, 50% that way, 50% that way, or 100% that way, or 100% that way. Then if we escape those values, we know we're getting into an overextended zone on the day. So that's the ADR percent. And what I know a lot of you don't think in percentages. So I wrote the indicator to give us not only that 1.24%, but also what that equivalates to in a dollar value for that particular stock, right? Because a 1% move in a $5 company is completely different than a 1% move in a $5,000 company. The next one is market maker move. This is a thinkorswim thing. So all I did is I took the language from here. If there is a market maker move shown here, it will show up in that indicator. But it has to be showing here or there's nothing to show. Thinkorswim did not really think this out. If there's no market maker move, you just won't see anything there. That's not a good way to do things because, you're going to come across something where say there's just no market maker move here, and you're thinking maybe you did something wrong, that you need to turn something on for it to show up. And that's not true at all. If there's no market maker move, you just don't see anything there. A moment ago, I was on the VIX, and when there's no, it should look like this. See how it says INF, information not available? That's what it should do, but it's not. It's not what happens all the time, right? So um, when we take all of that back to the watch list, if there is a market maker move, it will show up. And if there's not, I just left it blank. So that's why sometimes there's just no reading. Now you're going to see sometimes where it says infinity, INF. That's okay. You didn't do anything wrong. It doesn't mean that the market can go to the moon. This just had OPEX, and it's kind of screwing with, the rebalancing and everything. And it's okay. There's nothing wrong with it. And it'll sort itself out in a day or two. So I wouldn't get hung up on it. Remember, we were just there and it also showed INF, data not available, information not available. So we'll just leave it alone, right? Otherwise, I did try to color code it a little bit. Obviously, it would never turn red, right? Because it's just going to get bigger and bigger and bigger, or it just isn't there at all. It's not like there's a negative market maker move, but there is greater and greater impact of a market maker move. So what I did is if it got above 2%, it changed into a different color. And that would kind of get our attention and say, this isn't just a regular market maker move. This is a even more larger market maker move than we're used to seeing. Now, unfortunately, these next two, I'm not allowed to share because these are those custom private indicators that come from companies that sell indicators. And if I give them out, then they're going to try to sue me, and I'm not going to get sued for that. So I'll explain what they are, but I'm not allowed to share those two. And basically all it is the squeeze indicator, the pro squeeze indicator, right? So if we come in here and we look for the squeeze, these ST Pro squeeze indicators, that's where they come from. Simpler trading pro squeeze indicators. Now, unfortunately, I can't give that away, right? I'm not allowed to, but I can explain what we're focusing on here. It's these dots. So when the market is in a squeeze, we're going to get these red dots right there. And that's all that we're focused on is where's the squeeze? And we can see those red dots. We were in a squeeze all that afternoon, still in the VIX. That's not helpful. Okay, so it's the squeeze indicator, just a more responsive version of it. I've had people ask if they should buy it, if they need it. Look, you don't ever need an indicator. So if you think buying it is going to solve something, it's not, right? It's not something you have to have. But if you can afford to own it, it certainly will help you better visualize a squeeze. It's a more improved version of the squeeze indicator. Now, there's nothing wrong with the regular squeeze indicator as it is already, right? This is just a more improved version. So what the watch list is telling us is, are we in a squeeze or not? And I've got the H there. So hopefully by now you guys know that when it has the H, it's because it's an hourly, right? So that's how I tend to do things is uh, if I've got this on an hourly, then I put the H there to remind me that, oh yeah, it's the hourly. And as you can see, like right here, it's a simpler trading version and I'm not allowed to share it, right? So um, in my Thinkorswim Discord, you might find a version that they didn't make. It won't be as good as theirs, but I believe at some point I coded my own version. Obviously trying to avoid mimicking theirs because, just duplicating theirs wouldn't absolve me from getting in trouble. But I believe that I did code my own version. You could go in there and maybe kind of hunt around to find an example of it. They have made more than one version, which is why I have two versions loaded here. One came from one of their webinars. I don't think they actually was trying to share it, but they accidentally did. And I mean, well, if they're giving it away, I mean, I took it. Okay, so Sizzle Scanner. Sizzle is a Thinkorswim thing. It's a word literally that they invented in the trading world. Sizzle, the word itself, has been around since bacon, right? But they apply it as a system of measurement. So 5 days is sizzle. It could be 5 days of volatility, 5 days of share volume, 5 days of whatever, right? So here on the, the options chain, we can see that we have a sizzle index, and we have the call sizzles, and we have the put sizzle, volatility sizzle, and then share volume sizzle. Whew. If you want to learn more about sizzle, I can't stress it enough that you want to go to the ticker tape, which is a TD Ameritrade publication. You can find it by going to Google and typing in TD Ameritrade publication. So if I come in here, right, ticker tape, and type in the word TD Ameritrade. If you just type ticker tape, you're going to get some very strange results. But if you type in ticker tape, TD Ameritrade, even if you spell it wrong, you'll get this, right? And from here, if I search sizzle, I'm going to get all these articles about sizzle. I think there's 50 in total that kind of cover all the different things about sizzle. So it's pretty awesome. It'll explain it in much more detail, but the main takeaway is we're looking at the 5-day average of whatever, right? In my case, with this watch list, it's a sizzle scanner. So I'm looking at things that are hitting at least 250% sizzle, and then 500, and then 750, and then 1,000. If there's too many things, if your watch list is too big, you might get this loading error, or you might get, some other error. If you do, try to turn off some of your watch lists. One thing that I've found is that, say, like my high-low list might have too many names in it, and then it'll overload all my other lists. So I go in and I put that on blank. If you don't have a blank watch list yet, you might consider making one strictly for just this problem. Because if you have too many things that you're looking at on Thinkorswim, you'll start to get those watch list errors, right? So you can go in and turn watch lists to blank. And then if you are getting a loading error, that might solve it. Another thing with this is if there's no sizzle, or if the data just isn't there, it'll still show you loading. I don't like that. I wish it would just not show me something if there's no data. Kind of like how these that are empty on the market maker move, there's just no market maker move, and so it's empty. I like that. I don't like it when it shows loading, because then I think, well, maybe there's something there and I need to wait for it to show up so I can see it. So that's the sizzle scanner. This is just volume sizzle, right? And it's not options volume, because I used this in the pre-market. I want to do share volume. But having one that would do options volume would be pretty cool. There is a way to code that, but I got to say, it really, really bogs down the machine. And it's only going to be good when the market's open, right? It wouldn't work in the pre-market, which is when we're using all of these. And then the last one, be out. Breakout, breakdown. Be out, be down. Is the breakout today? Is it testing yesterday, right? Like that would be an inside day breakout. Is it continuing from yesterday, continuing from 2 days ago? Just like it sounds. We're breaking out today. We broke out yesterday and it's still going. We broke out 2 days ago and it's still going. Just like that. Simple, simple. So all of these can be found, other than the squeeze ones, right? I can't share those. All of these can be found in the Thinkorswim workbook Discord, right? And I gave a description in that Discord on how to use them. That way you can take my watch list and you can load them up just like this. And that way you're looking at the same thing that I'm looking at in the mornings, right? So hopefully this video wasn't too long and you were able to better understand the things that we're looking at on a day-to-day basis. And now you'll be able to set your watch list up to make it look like mine and can follow along as we're working through things in the morning briefing. I appreciate your time and I look forward to seeing you at the next one.